We stated in Saturday's video we needed three things to happen. Let's review. Number one, we needed Bitcoin to continue its rally. Number two, we needed IGV to stabilize. Number three, we needed silver to hold. We stated if we saw those three things that we could see the market stabilize and start grinding higher. Instead, none of those three things have happened. Not one, not two, not three. No matter how we look at it, none of them. I gave a level today when we were doing the public pre-market, and that level was predicated upon right here, and then just dropping it straight down. And then what we're going to do here is we're going to drop that to the 4 hour for a minute here. You have to bear with me. This thing's super slow tonight, and it's been slow all day. You guys may have noticed that as well. Now, it looks like they did some kind of update here, and then their infinite wisdom decided to change my colors. But have no fear. What we'll do is we will change them back so that we can see those colors, and hopefully that works a little bit. And let's see if that does it. No, that's not what we want. We're going to want the value high in neon so that we can see it. And then we're going to do the value low in that as well. And then we'll just keep point of control, and we'll make that red so it stands out. Actually, you know what? Let's make that blue so it's nice and clean, and we can see that. Perfect. Yay. So these neon levels, okay, they're your value high, your value low, and your point of control. And so we drew this on the 4 hour from this pain point. And what we did this morning was just say we need to watch those levels. And there was a reason for those levels because we watched that previously. We're going to get rid of the pre and the post for a second. We're going to drop this back down, and we're going to show you exactly what happened. So we can see how we were hitting it here on February 4th. We can see how we tested it here on 9:30 on Monday. We can see how we bounced perfectly off of it here. And then we have this suck salad, which is Thursday at roughly 10:50 when you broke. Once you broke, that was it. Now, the important thing about this, once we know where that level is and we can see the break right here, we just watched. And we knew that if you broke, the next level for you was where? It was that 600 level. So what is this telling you when we see that? It's telling you that you're losing, and you're losing a major level. So then when you start running through everything else that we went over on Saturday that was supposed to happen, for example, IGV, which is breaking right here at 10:35. Bitcoin breaking right here. And what time? Around 10:54. Silver breaking right at 11. So when silver's breaking, and the three things that we went over on Saturday's video when we followed all week, remember, that's why I always say subscribe and share this video, because what we go over here is actionable. We're not here to tell you what's going to happen because nobody knows. We're here to give you definitive levels that you can watch, learn from, and start implementing them into your own trading. So when we saw that happen, and we're watching those break down at the same time that you're breaking that level that we've been yammering on about every single day in the public pre-market and talking about on Saturday as well. What is that telling you? It's telling you that you lost everything. So to think that this is going to bounce doesn't work. Now, what you can do with that is you can profit from it. And I can give you a really quick example of how to profit from this. Now, if you're in the community already, you already know this because I've gone over this ad nauseum today. We were not buying this. We were doing the exact opposite. We were saying that you should be selling into this and be looking at finding shorts. Were these the shorts? No, there were much better shorts out there today, in my opinion. Obviously, APP was just an absolute monster short for us. I'm going to go through that on Saturday and walk through it step by step, how we shorted that one, why we chose that one, and literally step by step. But later in the day in the observations room, I put out when everyone's looking at this breakout. When you know that you're weak like that and you can't get over levels and you see these higher highs, all you have to do is look for these. And the more definitive they are, the more they have a higher degree of failing. So everyone's giddy as a schoolgirl because they're popping over that open, retest, open. This is it. It's 2:30. They're going to go. Dentist's favorite time of day. Not so fast. Boom. RSI is telling you negative. If you're using that on days like today, you can do exceptionally well. And what this did was provide a huge opportunity for somebody that wanted to short and just stay short and get involved. And that kind of knowledge overlaying with what we just went over is how you should be looking at the market right now. Why? Because we've been saying for some time, you are not in what? A trending market. You are in a trading market. You have been consolidating and hitting the same areas since October 10th. You'll remember if you go back in the day, October 7th, we were actually back here saying, hey, the market looks really bad. We actually went to cash. Not that we've been in cash for this time, far from it. But what's interesting about that is you never really came back from this. You've never come back from that. You had the one rally, and then we've just been going sideways ever since. You're having your sector rotation, which we've talked about, but I think this is a very important distinction. Now, after hours, there's some things that we should definitely talk about, but I think we have to just go through the basics. Number one, if we take a look at, no, we don't want to do Colgate. We want to do crude oil. Why do we want to do crude oil? Well, there's a couple reasons. We want to look at crude oil because we have CPI tomorrow. Now, with what's going on with gold and silver and the market, there's a couple issues out there. Number one, does he change his mind about the Fed? Because this guy's not cutting rates in this environment. So he's not going to want to hear that because he wants rate cuts. What he wants and what he's going to get are two different things. Just so people understand this, the chairman just doesn't say we're cutting rates. They actually vote on it. So I think that's an important distinction. If you look for January and where you started at 57 to the average price of 61, could that affect oil? Yeah, it's going to affect oil. And what else it's going to affect is it's going to affect CPI. Now, that doesn't mean that these numbers can't be, I don't know another way to say it, but like finagled or played with. Of course they can. And I think we've seen that no matter who's in office. But if we go to January here and we look at gas during the same period of time, it's not a question. Come on, little guy, you can do it. I believe in you. It's not a question of why. When we take a look right here, what are we saying? We're saying exactly what we want to say, which is you're rising. And whether we want to say it or not, there it is. Look at it. And why do you care about this? Because it's telling you that prices are going higher. And if prices continue to go higher for gas and for oil, then how in the world are you going to have a lower CPI? Now, you can go look at Truflation, which for time's sake, I'm not going to do tonight because I'm really under the gun with time lately. And I just want to point this out. If you go back and look at these peaks and go and take a look at when you've had the highest CPI numbers, it's right around when you have really high gas. And that's because it's a huge part of CPI, even if it's X food and energy. People need to realize this. So why do you care about this? Because if you have a hot CPI tomorrow, then that means that you might see what? You might get rate cuts. Well, that doesn't make sense, right? Well, that's what they want. They want a hot inflation number, and then they're going to tell you they're going to cut rates anyway. It's not going to happen. That is not going to happen like that. So then that asks the question, if you get a hot CPI number, why in the world are you watching gold come down? Because shouldn't they be using gold to hedge out inflation? And the answer is yes. Now, one of the most interesting things, if we take this peak today and we just drop a line there, you're going to see that right in this level, and I'm not going to change the colors again. I guess they're doing an update on TradingView. It's just been a little bit of a nightmare today. But if you take a look at that value high level, you got right to the top of it. That's your point of control right here. And then from here, that's your value low. And you can see just from this peak how we've been respecting those levels. So what does that mean and why do you care? Because if you get a hot inflation number, what do you need to do? You need to hedge out inflation. How do you do that? Gold and silver. Okay, so then you go and take a look at silver, whether you use the futures or you don't. And you could see that silver is obviously going to implode more than gold because central banks would rather own gold than silver. It's just easier, right? It's just worth more per weight. I mean, think about storage from a physicality standpoint. Anyway, what does this mean? Well, you would think metals are going to rally if you get a hot number. All right, great. So now you get a hot number and metals rally. What if we get a number that shows inflation is really low? All right, well then metals are going to collapse, right? Because you're not going to need them as an inflation hedge. Well, is that what this is saying? Well, if inflation's really low and the bond market's rallying and you have a strong labor market, which non-farm payrolls was one of the strongest levels that we've had, what's the bond market going to do? Right? So this is really an interesting time because I think either way, you can make the argument with either way, you may be hosed right now with the way you're watched in here. If you're expecting them to cut rates and you're expecting that to drive the market, I think that's going to be a real issue. Now, the dollar did not move today, but if you go and take a look at things like XLU for a second, and I think this is super important to get, XLU is pushing. Why? Well, they're acting like you're going to get a number that's going to show low inflation, and because you have low inflation, that therefore you're going to cut rates. Well, if you have low inflation and metals drop and you have a strong labor market, why are you messing with it? Why are you cutting rates? You know, UBS came up with an article today. No one's really talking about it. They said no one's going to cut rates to 27. And I think that this really puts the market into perspective. So the way that I would look at this is I would look at the Qs. and I would say to myself, what do I really have to pay attention to? We're going to clean this off for a moment. And we're going to say, what do I really have to pay attention to? I got to pay attention to the 600 put wall. You're going to want to remember that for tomorrow. That's the first thing. Second thing that you're really going to want to pay attention to is this low. Let's put that magnet on for a second and drop that down. And then when we understand that that 594.76 is going to be a level that we need to watch, obviously we have this level as well, which is that 600, which we're currently holding. And then, of course, you'd have this low here, which 580, and everyone feels that you could never get there again. You were just there. And then you have right in here that 589, which has been tested over and over again. So could you get there? Yeah, you could get there. Now, here's where it gets super interesting. If you look at the market as a whole, and we are believers in RSI. I mean, I'm also believe in gravity. You don't have to believe in gravity, but it's still going to work, guys. So if you take a look here from where you're at, popping over this to where you are, this is not warm and fuzzy. The hope was that this corrected itself by what? 3 things. We wanted 3 things to happen to correct this, to feel warm and fuzzy about the market. The first thing we wanted was Bitcoin, and we wanted Bitcoin to stabilize. It is not stabilizing. If you measure this bar down, you'll see that it broke the 50% line, meaning if you took that bar and you measure from here, you will see that you broke it. So we have net sellers in Bitcoin now. If you look at IGV and we say we wanted stabilization, because if we get stabilization in software, which is 18 to 20% of the Qs, then we'll have stabilization. Did we get that? No. You could make an argument that you still have a shot. I'd like to think so, considering that I bought IGV, but I'm not feeling, say it with me, warm and fuzzy. Did silver hold? No, I've seen what holding looks like before. That's not what holding looks like. Okay, that looks like margin calls. So that takes us back to the Qs. What do we have left? And this is where it gets super interesting. After hours, we have coin. Now, we have Bitcoin and all this stuff that's been, bonking around. But Bitcoin, actually, just so we're clear on this, the estimate was $1. You're coming in at a loss. And for whatever reason, TradingView doesn't have it open yet. So we have a loss here. Now, maybe it's down so much that it's not so bad that it actually bounces. That very well could be the case. It's gotten absolutely decimated, and everyone and their sister, including me, are short it, and that could be one thing. So could you bounce on that, and could crypto bounce for tomorrow? Maybe. And again, super interesting here because AMAT crushed. AMAT was a really good quarter. If you look at AMAT, you closed at 24, you're up $50 after hours. You're absolutely ripping after hours on AMAT. Absolutely crushed, raised guidance, things are great, everybody's great, couldn't say great enough. How about a net? And so what you're seeing are some of the companies that are linked to the AI trade are doing really well after hours. And so for me, this is super, super important for us to get, right? So is it an earnings driven problem? No, you have some companies out there that are having some earnings, but when we look at this, no one's talking about a slowdown. There is no, oh, it's going to slow down. A matter of fact, like when we talk about Micron and these names and we're looking at what could happen, what we're talking about is we're talking about it from the standpoint of how we're going to trade after hours or how we're going to trade tomorrow or how we're going to trade here. No one's arguing the earnings. What we're arguing is, does the market look weak or does it not look weak? The market looks weak. What does that do? It presents opportunity, if it gets smoked, to buy the right names. Those names haven't changed. What might change is the fact that the NASDAQ could come down. And let me just explain where I'm going with this. And I'm not saying that this is going to happen. But what we like to do is have a list of names that we want to buy. And I don't think this is a huge coincidence that this is happening again, right? I'm not a big believer in coincidences. But if we go back to December 24, and that's when we stepped into all that winning and liberation. We were just showered in winning and liberation for about 4 months. Was it that much? It was about 3 months of just showered in winning and liberation. Just so much. Couldn't handle it anymore. We had to pause it. And then you start looking at the pattern recognition that you have going on here. So if I was to show you this, right, and just say, well, this is what's happened, and, we're breaking out, and, now we're testing this lower level right in here. Like, take a look at this. Watch this. Watch this. See how where you are? Oh, we're going to bounce off this because this is the levels and we've been holding in this range, but this is a concern of mine. And we have this negative divergence right here. And, we just have to watch the leaders and find out who the leaders are. And we're starting to lose leadership in here, right? You could hear me saying something like that. Probably hear it in your sleep at this point. And then you came over here and I said, oh, here we are and we're in this range and we're starting to lose leadership and we're rolling over. Show me the difference. Show me the difference. You can't. It's the same exact thing. It might be a different mechanism, but were earnings really here? You could argue, yeah, because he was going to tariff everything. And anything that was moving was tariff lemonade stands. It was everything was getting tariffed. So it was one of those things where at the end of the day, you had a catalyst that drove us down. Are we going to get a catalyst here in the fact that maybe we think there's going to be too many rate cuts and there's not going to be any? I don't know. But looking at what happened here, and seeing the deterioration of the three things that we needed, you have to be cognizant of what's going on. This is not earnings driven. This could be macro driven or something else. And we have to be very cognizant of that.